What is cooking, you guys? How we doing? What is going on, yo? What is going on? Need to share this everywhere. Boom, boom, boom. Get everybody in here. Where is this? In my public chat. Come hop in live. Everyone. All right. Yo. So who took gold longs? What happened when I said, what did I say would happen yesterday? I wanted price to drop into that daily fair value gap, create an SMT, and then expand higher from there. And what happened exactly today? Literally dropped down into the daily gap, created an SMT, and now we're long. I bought long this morning from this 15-minute fair value gap tag. I'm already basically break even on the trade. I want price to go to these highs here, Asia highs, but I don't think, it's either FOMC just blasts it to that today or whatever FOMC wants to do. But by 12 o'clock, I'll be closing out of the trade because I'm not going to let anything past 12 or just like partial if we go to this high and then go break even for when FOMC comes into play. But what we had yesterday was legitimately perfect. Like we literally mapped it out perfectly. Daily gap. SMT with silver. You can see the higher low here. Silver's at the bottom right. Lower low on silver. Trading down into this low end daily gap. Just like that. And then big SMT here. This is exactly what we wanted. And now price is expanding. We even had a retracement down into this inverse fair value gap on the hourly. We kissed it, went. Very, very nice. Played out to the T. Indices weren't on my agenda today. I didn't like how this was delivering. Oh wait, hold on one second. I have to record this. All right, okay. Never mind. Now I'm recording. Okay. So indices were pretty hectic in the morning. The Dow Jones was the strength leader, NASDAQ being the weekend of the triad. ES, again, always in the middle. We have a daily fair value gap down here that I'm anticipating FOMC to maybe drag us into when the release comes about. And then this daily gap on the S&P 500 down here, if FOMC can just blast us to this. But again, if I were you guys, let FOMC do its thing and then come into the market after. So wait for after if they cut rates or not. This is one of the most important meetings that we have from the Fed. So make sure you guys are moving with caution. And the Dow, I think the Dow reaches this high while the NASDAQ shows weakness lower. Yeah, good. Wait for FOMC. Be patient. Don't do anything stupid prior. But as of right now, we're in a nice gold long. Already protected basically my entire position. So no harm, no foul for whatever happens from here on. No harm, no foul. And we'll do giveaway talks when the giveaway is time. It's not like I'm randomly picking people. I'm literally picking people who are the first to type in the word that I say. That is how I pick the winner, and that's how I will pick the winner. Oh, you did book profits on the 4-hour gap for what, NQ? For indices? I'm assuming when we traded down here. I guess. Oh, okay. 4-hour gap, which was what 4-hour gap? We haven't tagged. There's no 4-hour fair value gap. In my opinion, all of this is low resistance liquidity higher. I want to take partials at this high. Or I'll close the full position at this high. I'm already booked at like a 1.7 risk to reward. But if it's like floating at that by 12 o'clock, I'll just close and walk away. And then we sit back and watch FOMC like a movie. It's going to be fireworks, guys. It's going to be fireworks. I bought the 15-minute fair value gap down here. I bought the 15-minute gap down here. My stop loss is already resting here. That 15-minute gap also aligned with an hourly inverse fair value gap. That's literally what? Where is this guy? I'll say this right now. In regards to my executions, I don't have to be strict with executing 1 hour to M5. If the M15 looks better than the M5, I'm taking the M15. I don't care. It's not like if I execute off of a 1 hour to a 15-minute, the trade's automatically neglected and wrong. No, that's completely ridiculous to think about. It's about the structure behind the trade. Like, how is price looking in regards to structure on that time frame that you're looking to trade on? I'm only taking trades between the 15-minute and the 5. I can go between the 4-hour to the 5-minute or 4-hour to the 15. I can go from the hourly to the M15 or the hourly to the M5. It doesn't matter. Literally does not matter. The primary time frames with good alignment is weekly 4-hour, daily 1 hour. That's like better alignment. Or even in that case scenario, you can still do daily 4-hour, hourly. No, I'm not trading euro now. You should be watching futures charts. Why do you have the lower fair value gap on NQ marked up? What lower fair value gap? Oh, because I don't expect price. I mean, I don't think price is going to bounce from here. But again, I could be wrong and price could bounce from here. Whatever FOMC wants to do. Am I going to look to lock something in right here from this daily gap? No. I don't. I'm not expecting that. I stream Tuesday, Wednesday, Thursday from 11 a.m. to 12 a.m. Eastern Standard Time. That is my time. For gold SMT, you were obviously using GC1. Yeah, no. So like you can utilize XAU Euro and XAU GBP. Like you could use those as well if there's nothing on silver. But silver was the one that tipped its hand to me. I have all of them. I have them all marked off. Or like everything shown up. I only just started using XAU GBP and XAU Euro. Like I just started throwing it in there. But it's not confusing to me. It's not. It could be confusing to you guys if you want to just stick to gold and silver, that's fine. Or if you want to stick to just gold, XAU Euro, XAU GBP, you could also do that too. So if I have a 4-hour and a 1-hour gap aligning, could I still execute? Yeah, absolutely. Yeah. Yes, you can. What's up, dude? How do you know when to trade funded accounts and evals? This week is a perfect example, Luke. I haven't touched my Apex accounts on this week primarily because of FOMC. Like I have stacks between like certain accounts that I trade when it's the highest probability where I trade everything, and then I have certain stacks of accounts that I only trade during where like it's a 50-50. Like I'm long right now on Blue Guardian from that 15-minute gap on those accounts. I'm long on a couple of other props on this trade, but my other accounts I have not copied. But does everybody understand, like for the people that were in my live yesterday and that were in today, you guys see what I was looking for in regards to what I wanted for price for higher today on gold and why I wanted it? I think the best time frame for entry will be the 15-minute. 15-minute, it's a mixture between an intermediate to a lower time frame, and it will be the best for capturing intraday moves and the expansion of the daily candle. Because why would it bounce from here? There's no reaction. There's nothing to frame from here right now on this exact chart. And as well as one, you're taking a straight up gamble to see, like, price could 100% bounce from this gap. Yes, it definitely could. But I don't want to take that guess or any sort of premature assumption prior to if they're going to cut rates or not. Like, you need to understand that. The news is what you need to focus on. Just because we're in a daily gap, cool. We could bounce off of it, sure. There is SMT inside of that daily gap. But news could literally ruin the entire bias. News could literally ruin that entire assumption. And if you're long prior to the news release, then you will get bent over. And gold is pushing very nicely. And if you're in a gold long, partial at this high. Because that's my partial point, and then break even. What time frame are you looking at? This is the 1 hour time frame. Whenever I'm like in a trade and like I'm in it at a good point in price and it's moving in my direction properly, a good thing for you guys to do if you're stuck and sitting on the charts, look at the trade from a 1 hour time frame, or like a 15-minute to a 1 hour, like in that range, or a 30-minute too, just so that you're not watching it on like a 5-minute or lower to watch price do choppy movement that could second guess you, like being in the trade, get you emotional, and then you close prematurely. No, I didn't take a short earlier. This is the only trade that I've taken so far this week. Only trade. I'll trade indices tomorrow. I'll definitely trade indices tomorrow. You have the same outlook, but yeah. Like indices today. Actually, here, I want to show you guys Euro. Euro was pretty good. I still think that dollar for my forex traders. I still think that dollar goes to this low, but it'll probably go to the low upon FOMC release. I'm not going to be positioning myself within this, but I do think the dollar goes down and completes this sell model. It has taken forever to do it, but it's gravitating finally to that low. Luke, weren't you in at the beginning of the stream? I bought the 15-minute fair value gap here. That also aligned with the hourly inverse fair value gap. Right here. We inverse the hourly gap, and then I bought the inverse fair value gap on the hourly that aligned with the 15-minute fair value gap. This closure at 8 a.m. confirmed to me that price should reverse and start the initiation of the buy model, because this is a clean, perfect displacement candle. That is the candle that I want. That is the candle that I want to see. I want to take contracts off at this high and leave one contract running all the way up here or here for FOMC, just in case price wants to do some crazy pump. I'm going to leave one contract all the way to this high, either this high or this high, probably Asia high. Literally. Once we confirm the start of the buy program, you'll see that a majority of all these PD arrays will work in respect, whether it's a fair value gap, order block, propulsion block, whatever it is. Vig, do you have the same target as me at 3722.7? Or did you already partial points out of this? Okay. I'm basically risk-free right now, or I've been risk-free. Luke, where did you get in? I've been in buys, Ahmed. Sorry if I said that wrong. I'm full leverage on all my accounts to the highs. I wish that I was up earlier. Like, I would have bought all the way fucking down here. I literally would have bought all the way down here. This would have been beautiful. Closure above this, buy there. Like, I literally wish I was up like before 8 o'clock. But I'm a lazy sack of shit and I don't do that. Like, I would have been in much earlier. Like, all the way down here. It would have been like a 1 to 10 risk to reward. I think I might have said it like probably 15 times. You're turning 18 this Sunday. Happy birthday, or happy early birthday. What's your best advice with starting a funded account? Are you funded yet, or are you going into an evaluation? Vig, that's going to fly over everyone's head and no one's going to understand what that means. Like, literally not a single person is going to understand that. Unfortunately. Gold is not like indices. Yes, I'm already in a position. I've been in a position. I have been in a position on gold. I bought the inverse fair value gap after we displaced from the 8 o'clock candle open that aligned with a 15-minute bullish fair value gap here. 15-minute fair value gap, hourly inverse fair value gap tag, buy. SMT at the lows, buy. Buy, 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 buy. Well, if you're not in a position yet, then don't take a position because we're already close to the draw. I don't use market structure shifts. That's like me. That's like you asking me, do I use change of characters or CHO a chooch? Like no. Market structure shifts are 2022. I don't think that price is really going to do much until, well, at least past 12 o'clock, we're not going to get a lot of movement. It's going to be a dry time on price. So after the stream today, what I would do if I were you guys, get some, like, go to the gym, get some food in preparation, take like a 2-hour long break, come back to the charts at 1:45, 2 o'clock, and then watch FOMC. Don't sit on these charts from now until then. You're basically just donating money to the market at that point. Fuck, I missed. I have a video on my YouTube channel. And it literally shows, and it's titled, How I Execute My Trades. Don't you think price will correct itself and push at FOMC? For what asset? Indices? Yeah, no. Yeah, let's look at U.S. oil. U.S. oil. I wish U.S. oil would like fix itself because, like, obviously, you guys know that I hate trading consolidating markets. Like, this is, at least from a weekly time frame, it's not looking good. Surprisingly, U.S. oil, or CL, is still within this weekly bearish fair value gap here. And we have the same sort of ordeal with HO, still within this weekly fair value gap here. But this is the problem. It's a situation where it's like, okay, there's SMT at these highs here. There's SMT at these lows here. There's SMT at these highs here. Just like all of this is a recipe for disaster. I would favor lower prices, but price could go higher because there's an SMT inside of this low end. Like, we're between a weekly bullish fair value gap and a weekly bearish fair value gap with SMT at the highs and the lows. Now, is that a recipe for high probability, or is that a recipe for disaster? In my opinion, it's a recipe for disaster because I don't even know. I can't give you a strong bias on the weekly time with the weekly time frame. If I can't give you a strong bias from a weekly chart, then that is kind of a sign for you not to do much. even the daily, I have really, there's no imbalances that I could reference. There's just, again, like that SMT at the highs, like this. And we even closed above this high. So like, it's not even like it was a wick with an SMT. It's not something that I would be confident in putting risk on when I see this on both higher time frames, weekly and daily. That scares me. That scares me and pushes me away, you know? I never like seeing that. My strategy is the forever model. SMT as the most important aspect, and then price creating an SMT inside of a fair value gap or an external high or low. And in this case, today, gold was my favorite one because we had an SMT inside of a daily fair value gap. Look at this daily high, or this high or low resting here, and look at the same charts. Look at silver on the bottom right. See this? Same corresponding low here. Look at my crosshairs. We have a low here from Monday, and we have a lower low from Wednesday. Higher low on Wednesday. I like gold higher because we have a cracking correlation at an internal range liquidity pool. That is what I like to see. And you can see, once we go from that daily chart to the hourly, we want to see, is this SMT holding inside of that daily gap? We don't know until price starts displacing higher, giving us a change in the state of delivery and also violating bearish PD rays. The first indication was when 8 o'clock came in, and 8 o'clock closed extremely strong, violating that hourly bearish fair value gap. Then what did price do on 9 o'clock? Came down, it tagged that hourly inverse and popped higher. That is it. And then the correlation between oil is CL, RB, and HO. I don't use UK oil. I have a standing desk. So like I have a standing desk, so I can press this button here, and this button will lower it. Like already, look, look, see, I'm lowering, and then I go higher. Like that. I don't want to be sitting on my tush all day. I want to be moving around, you know? I want to be active. I don't want to get bunions. Did anybody take shorts today on indices? On NQ or ES? Anybody? I don't use Awanda. I don't use CFD charts. I use futures data. Was there even there was an SMT? There was an SMT here at this time between ES and NASDAQ. Let's look at this really quick. All right, now let's go to 15-minute. All right, so this was the SMT. The open came in there. Rolled to 5. I think NASDAQ was better. But again, I don't really know where I would have gotten in unless you shorted. You shorted the closure on NQ. But 9:30 open, this was kind of like a case like yesterday. It's either you shorted the open, you shorted after the open once price closed and created that SMT at 9:30, and then we closed below here. We closed below here being a breaker. That also had a fair value gap aligned with it. That would have been the short, in my opinion, on NQ. That would have been the short. Yo, Tyler, how we doing, bro? How's Miami? You take any trades today? Cross your fingers for gold to reach my TP at 3722.7. NQ shorts was the best out of the three. NQ shorts were nice as fuck. I was just on gold, but NQ was nice past the open. And Dow acted like a meat. Dow at the open looked like Dogecoin back in 2020 or back in 2022. That's a fire entry. Damn. Bro's holding a bag right now. Is that across all of your accounts? I mean, yes. Why did I even ask that? That's fire. GG's. Are you gonna hold that through FOMC, or are you gonna let that ride? I think that ES goes down to here. That daily imbalance. And if that daily imbalance gets tagged, then NASDAQ can come down to the low from Monday. That's fire. Let's go. Let's go. I hope that Jerome Powell and Donnie T get into a feud and JP is like, you know what, guys? We're not cutting rates. And then the market just goes to oblivion. JP takes a stand for himself and goes, fuck you, Orange, man. I'm going to do what I want. And then he doesn't cut rates, and then the market goes. That'd be insane. Like, they're projected to cut rates in the rest of the meetings for the rest of the year. And if they don't, especially on this one, from how important it is, the market is going to get shafted. And if they don't cut rates and NQ and indices die, then my gold will go to 4,000. But yeah, you're right. I just find it so funny. The last time that I saw a video. It was Donnie T and JP, and Donnie was like, he like big brothered Jerome Powell and talked about cutting rates and like gave him like a smack on the back. It was like, you're gonna cut rates, right? Bah. Or talking into him, like pushing him to do it. You could tell that Jerome Powell was just pissed. It's just so funny. How do session timings work on gold, as in manipulation times? So you want to focus on gold past 8 o'clock. Like, you'll get an entry on gold. Like today, if I was awake, I wish I was. Gold really offered something beautiful past 8 o'clock. Like when we had this kind of manipulation lower, we created that SMT on that daily time frame inside of that daily gap. And this down close candle, you guys know my model. This one sweeps the low, close above it. This is support on price. 8 o'clock starts expanding higher, and then we just start creating bullish PD rays. 15-minute fair value gap is where it entered here. My stop is now basically break even. And you could just see how price is just respecting everything. And we're just framing a market maker buy model to these resting highs from 1 o'clock. Like that's literally smooth, sells out of the curve, manipulation occurs here with the daily SMT, and then price starts expanding, having a nice V shape to the opposing side, drawing liquidity. My low-hanging fruit and my first objective is here, then Asia highs, and then maybe we can get the daily external highs. If not today, most likely today, tomorrow, or FOMC completely neglects the idea, and then price ends up going lower. But regardless of whatever that happens or whatever the verdict is, then I will be risk-free on the remaining runner contracts that I have. I have pushing on 6 years of experience. I started trading like back in COVID time. So like I'm 5 pushing on 6 years. And the strategy that I'm using that I have been trading is I call it the forever model. And it's all based on 2 key components, or technically 3. The first being SMT divergence, which is looking for cracks in correlation in the market between correlated pairs, and then looking at cracks in correlation at key levels, aka internal range liquidity pools, which is fair value gaps or imbalances, or external highs and lows, which is swing highs and lows, and looking for SMT at those times in price or at those key levels in price. So for a 50K futures evaluation, I would be risking $200. Let's say it's your first account. I will be risking like $250 to get to a 1 to 2 risk to reward, or if you're looking for a 1 to 3 risk to reward. I would keep that at a consistent 250. Or if you don't have a trailing drawdown, and let's say you get to a 1 to 2 risk to reward on risking 250 on the first trade, you get a $500 buffer, risk $500 on the next trade to make $1,000. And then boom, you're at $1,500 on the account. And then all you need is another $1,500 to pass the account. It's really depending on who you ask, because for me, I'm typically doing and passing. I'm very aggressive on evaluations. Like I'm either passing the account in a couple trades or I'm failing the account in a couple of trades, like max 3 to 4 trades. You know? That is my methodology. But again, don't be aggressive on evaluation accounts if you don't have the money to be aggressive. If you're trading these accounts when you don't have a lot of funds, trade them like it's your own, like trade it like it's a funded with a strict 1% risk per trade, stagnant 1 to 2 or 1 to 3 risk to reward, and then go for the base hits. Appreciate that, brother. Thank you, thank you, thank you. Come on, gold. 3722.7. Gimme. Yeah, so I'm looking at, this is an hourly chart right now, and price is trading away from a daily bullish fair value gap. There's SMT at these lows here. The 15-minute time frame had a fair value gap aligned right at the tag with that hourly fair value gap here, or with that hourly inverse. So my entry was that 15-minute gap tag that aligned with that hourly inverse right there as well. So I bought in here with my stop covering the low end of that hourly inverse, and then I wanted to target the hourly external swing high right here at 32 or 3722.7. That was my entry. And you could see like literally like the low of the 9 a.m. candle was the tag of that hourly inverse. And if you guys want validation on this, go to the stream that I had yesterday and watch it again, and you'll see me calling out this exact move to the T. Like we literally called this entire thing out, coming down into the daily gap, creating a trade entry from that POI, and then price ended up expanding this morning from it because of what I listed before down here. Super easy process. All you're doing is waiting for a key level to get tagged, waiting for an SMT divergence to occur from there, and watching the reaction on the aligned lower time frame. Once you get all of those proper, you know price is then ready to shift to the opposing side from its retracement. Oh, also that is the beauty for Blue Guardian. There is no activation fees for the fundeds, which is great. A lot of other props have that, which puts in a lot more money to go into it, and they don't have that. Futures and currencies. So I'm trading. Gold has XAU USD, which is a CFD. And there's like forex.com, there's Awanda, there's FXCM, and then there's futures for gold, which is GC1, gold futures. The data is more accurate. Well, there's a monthly fee for these, but your goal is to not be on an evaluation for more than a month. If you're on an evaluation for more than a month, then there's a problem. You should not be trading them that slow. The monthly fee goes away after you pass. You should not be taking more than a month to pass an evaluation. Believe me when I say that. Come on, gold. Just give me TP. If you're consistently risking 1% per trade and you're taking 1 to 2 or 1 to 3 trades per week on your A+ setup, and you're winning, like, let's say 1 trade or 2 trades a week throughout the entire month, you are passing that account. And if you're not passing that account at a consistent, if you're not passing the account with that set of rules, taking A+ setups from your edge, then your risk management is completely off. You should not be risking 0.5% on evaluation, depending on what day you're trading. I say stay consistent on 1%. And then once you get into a funded, then you could drop down your risk if you want. In more than a month and didn't pass. Again, if it's taking you more than a month, that means that it's just a refinement of you working on your edge or getting your model down correctly. And that's completely fine too. Or your risk management is skewed because your wins are not outweighing your losses. That's a big thing. Like you need to go to your journal. You need to go to if you have a TradeZella or whatever it is that automates your journaling. Your winning days should be double your losing days, if not triple, based off of your risk to reward. That's something that you guys need to look into and go back in your journal to make sure that you are properly winning a good amount to the point where your losses do not hurt you. Take 2 losses, 1 win outweighs. I trade just New York session. Only New York session. Yes, I am in a gold trade. Long. I'm long on gold. I'm long here. I got in from the 15-minute fair value gap, aligned with the hourly inverse fair value gap, targeting 3722.7. All eyes on Powell. I'm going to sit. You know what I'm going to do? When 2 o'clock comes in, I'm literally going to sit in my chair with the recliner all the way back with popcorn and a Zyn in my lip and watching with with my feet up on my desk like I'm watching the fireworks play out. Today is going to be an interesting one. What is a Zyn? This. The key to profitability. That's what a Zyn is. Throw one of them suckers into your upper or lower deck before 9:30 open, and then watch you just get dialed on the charts. Oh, it's a 6. It's a 6. It's not a 3. Are you kidding me? Does it look like I'm a female? Absolutely not. Price action the first week of September, I think, was good. Last week was, I think, difficult. And obviously this week is a week where it's a pure example of patience paying off. Like, you got to be very, very patient when there is a big expectation of price leading into the market, aka this FOMC meeting. Super, super patient. Sit back, only execute when everything aligns with your model. Like, literally Monday and Tuesday, I didn't take anything because nothing aligned with my entry model criteria at all. And that's fine to me because I know that something will set up later on in the week, or if not even this week, the following week. But my best trades is when I have a tie-in from a higher time frame key level to an intermediate term perspective and a lower time frame entry. And today, for me, that was gold. That is exactly what I wanted, and that's exactly what we got today. We said this on the live stream yesterday, and it is playing out like how I said it yesterday today. That's it. That's all you got to do. Be patient enough to wait for your time to shine. Win doesn't matter. Loss doesn't matter. No trade doesn't matter. I trade gold and indices. I haven't traded foreign exchange markets in a while. They did have a good – yesterday was good on euro, actually, from this expansion higher. But occasionally, if price gives something on oil, I'll take oil. But my mains are index futures, and then everything outside of that has to be refined and framed from a higher time frame key level to a lower time frame entry, like gold here. Gold gave me what I needed. Indices did not. I would wait until 2:30 on indices today, or like I would wait for 2:30 for a trade opportunity just to see what happens when Powell comes out and talks and what he's saying and the verdict as to what he's going to do, rate cut or not, because you're going to see price wick one side, wick the other, do massive, crazy injections of volatility, wait for price to settle down, and then once a verdict is claimed, you'll know where price wants to go to next. So just be very, very patient in regards to FOMC today if you're going to trade it. But I will push you to the route of sitting back and watching, because that's what I'm doing. That's exactly what I'm going to be doing. I'm going to sit back, I'm going to watch and enjoy the fireworks. That's my plan. GC is gold minis. MGC is gold micros. For gold, silver, or gold euro, or gold pound. That's what you pair it with. Every single market has a triad of comparison. For indices, it's NQES Dow Jones. For gold, it's the ones that I just said. For oil, it's CL, RB, HO. For foreign currencies, it's euro dollar, pound dollar, dollar index. Those are the triads of correlation that you look for S&T. What do you mean, how do you watch them all three? Just have three of them side by side. NQ, ES, Dow. Oil, RB, HO. Euro, dollar, pound. Gold, gold, euro, gold, pound, silver. That's it. Just have them all side by side. HO, not HL. HO. HO1, RB1, CL1. I think that euro goes higher, and I think that dollar goes to this low. Dollar, I think that dollar goes to this external low at 96,377. But we already ran that same corresponding low, which is the corresponding high on euro. But I still think euro goes to this monthly gap up here with relative equal highs at 119,092. Right here. So we'll see. We'll see what happens. It'll be an interesting one. It'll be an interesting one. But I want to do the giveaway with you guys now. I want to do the giveaway for accounts, but now I need to figure out a word. I need to figure out a word for what to say and what you guys need to type. So this is going to be, what did we do yesterday? We did, the first one that we did was Sydney Sweeney. The second one that we did was the code new BGF for Blue Guardian. The third one that we did was Zin. Now the fourth one. What is the fourth one? Oh, no. We did another one, and it was Sniper. Sorry, we did Sniper with the dollar sign, and then the amount of people that didn't type it in correctly was concerning to me and made me question a lot of your guys' IQ. This one, This one, Oh, I got a good one. And this is going to test you guys' spelling as well. So if you can't spell, you're going to lose. Let's see. The first three people to type. First three people to type Jerome Powell. You have to spell his name correctly. As I'm literally typing in his name on Google to make sure that I'm typing it correctly and that I know it correctly. All right. And that was quick. The first three people that actually typed it got it right. The first three people. Picture taken. And it is Cookie, Arcast, Connor Franklin. And for the people that think that I'm lying, right there. The last message before I asked was the heart, and there's the first three. Take a good look. And there it is. There it is. And I'll do that every single time to make sure that you guys know that I'm not lying. Make sure that you go into their Discord, open up a ticket, and claim your prize. This is the three. This is the three. Sorry. Okay. I think gold still should be good here. I don't really like that candle with that needle sweeping that high. Still want to see gold take out that high. If gold wants to come down a little bit and then silver wants to tag this hourly gap to then go higher, that's fine. But I'm literally leaving this to go to 37.22.7. You think that was too easy? What do you want the word to be? Supercalifragilisticexpialidocious? I'll do the next one will be like some exotic female that I know. Like Emily Ratajkowski or Kim Kardashian. I'll give a hint. Tomorrow's giveaway will be a girl's name. 100%. So, Sonny, actually, one thing that you guys can note here. Note how the Dow Jones showed extreme strength today, and the Nasdaq showed bearish weakness. ES is in the middle. You're always going to see that between NQ and YM. It's either Nasdaq is going to be the weakest, Dow Jones is going to be the strongest, and ES will always be in the middle, or NQ is the strongest and the Dow is the weakest and ES is in the middle. It will always be like that. Always, 99% of the time. And Dow expanding so much higher than it was today. If you look and you compare, like look at this between, like let's go to the 4-hour chart. Look at the chart and the range that the Dow has been in. The Dow has been between this low, this high, and this low, this range. Impulse high to the retracement lower. Now, let's compare the same exact low and high here. Where is that? All the way down here to this high. What is the difference between the Dow and NQ and ES? Where is that same low? Same low is here. If you look between and measure the range. What is the Dow, or what was the Dow in this morning before it pumped at equities open? And what was the NQ, what was the NQ and ES in? Like if I even replay price right here, the Dow is in discount of the range, while NQ and ES are in premium of the range. The opening of this with an SMT at these lows here allowed the Dow Jones to expand higher because it was in discount with SMT at the lows. That's it. That is exactly why price expanded higher on YM. But if you are in the gold longs, hold your position until this 3722.7, and then at that high run, partial or close the position fully, and then leave a runner, to Asia highs, or you leave a runner to the all-time highs. That is it. But anyways, I hope you guys all have a great rest of your day. Good luck, good trading for FOMC. Thank you guys all for joining and being a part of this stream. And I hope you learned something. And I hope that we get some good price action for the rest of the week and follow the steps that I've been showing you guys accordingly in regards to how we are watching price. And if you did catch the gold longs like we called out yesterday, GG's. And I'm hoping that you are filling your pockets. Be safe, y'all. Take care. Deuces.